Bro, dude, did you guys see? The euro is at parity with the dollar. I'm gonna arbitrage this. I'm gonna go ahead and buy some euros. I'd like to buy 10 euros, please. Here you are, sir. You're a beast, man. I appreciate it. Dude, this is only 5 euros. I give you $10. I'm supposed to get 10 of them. Actually, sir, did you read inside the terms and conditions about our fees and our exchange rates that we have? If not, I highly recommend you take a look. Bro, this junk ain't even in English. What are you talking about? How am I supposed to read this stuff? So for the first time in 20 years, we now have 1 euro that equals $1. So how do we take advantage of this? Is the best way to go to a currency exchange, basically get charged out the wazoo for exchange fees and fees on fees for no reason? Well, actually, there is a better way. I'm going to show you guys a couple of different protocols that offer a decentralized euro token. Now, bear in mind, these are not without risk, but this is just something to notate and one of the benefits of blockchain. So before we get into this video, there are a couple of things that we need to note when we're looking at any of these stablecoin derivatives. The first is it centralized or decentralized? Second, how does it maintain its peg? Is it an oracle? Is it arbitrage? What is it? Third, what is the liquidity like? Does it have $1 million of liquidity, $500,000, or does it have $100 million? How has the past performance been? Has it constantly been on peg, or is it extremely volatile and seems to never hold peg? And lastly, make sure you're looking at this stablecoin in the proper currency. So if this is a euro, you want to look at it denominated in the euro. Sure, you can look at it in dollar terms, but come on now. How does that tell if it's actually been successful at holding its peg? The first one I want to talk about is the EURT. This is Tether's euro stablecoin. This one has the largest market cap. This one racks in around 200 million in market cap. It's a little bit more than that, but just something to keep in mind. Yo, hey, I forgot to tell you, if you guys are enjoying this video, make sure you guys smash up that like and subscribe to the channel and tell me what you guys are thinking so far of this video. Do you guys like this type of content or not so much? So if we want to see how good this has held its peg, what we would do is change USD to euro. So when we change it to euro, we can go on the max chart and we can see how it's held its peg. Obviously, there's about one time that it went out to 0.98 euro, but for the most part, it's held its peg really well. Tether is behind this one, and it is a centralized stablecoin. So these are two things that you need to notate. The next one is the S euro. This is from the Synthetics platform. This is a over-collateralized stablecoin, and how this one is collateralized is with the SNX token. In order to mint the S euro, you first need to stake SNX and mint SUSD. This can be done on the Synthetics platform. Once the SUSD is minted, you can then use this to mint the S euro. The S euro is pegged to the euro dollar. Let me go ahead and show you guys in euro terms to show you how this has performed over time compared to the euro. And as you can see, except for one crazy time where it went down to 88 or 0.88 euros, for the most part, the lowest it's gone is 0.96. And I believe this is due in part with the market cap. Right now, the market cap is only 5.2 million. So it is a really, really small market cap. So for a stablecoin, you will see some volatility. Whereas the Tether one has a larger market cap. It is about 200 million. Now putting the millions into perspective, Circle USDC has over 55 billion, like with a B, 55 billion in market cap. Whereas the euro for Tether has about 200 million. So you can basically say USDC is 250 times the size. That's how you can factor it in. Now the next one is the Iron Bank Euro. This is IBEUR. As you can see here, the price is somewhat volatile, but for the most part, it actually stays around 1 euro. I've already changed the euro terms, but you can see it stays around, I would say 95 to 1.02, 1.03 from time to time. And I believe this is actually due in part with the curve pool. The curve pool for IV Euro and S Euro is actually on Curve. You can actually earn about 13% yield on the Curve pool for this. So in my opinion, as the Euro is coming down in price, people are actually selling out of this token to get into dollars. And as you can see here, it is a lower market cap. There is 125 million in market cap. Before we keep going into this video, I want to go and explain the Euro to USD. The reason why this is something important to understand is that the Euro has never been to par with the dollar in over 20 years. This is the very first time. So this is almost like arbitraging between different stablecoins. This is what Forex markets are. This is where you can trade between the yen, the euro, the dollar, the peso, you name it. Several different currencies. You can do this in Forex. And Forex is actually able to be used on the blockchain. Let me go ahead and show you the Euro to USD chart so you guys can see what I'm talking about. As you can see here, for the most part, the Euro has steadily been over $1.06 for the past 5 years, and even more than that before 2015. So in 2014, this thing was at $1.40. Talk about craziness. To put this in simple terms, what this means is if you're buying a hamburger in the US, it costs you $1, you can exchange €1 back in 2015 for $1.40. So you can buy that burger for less than €1. It would be about 0.6 euros, and then you would have 0.4 left over. So you can basically get 1.5 burgers for the price of one. The reason this is interesting to be able to arbitrage between the euro and the dollar on the blockchain is that it doesn't have fees. There may not be as deep of liquidity, but you can do it in a decentralized way. So if I wanted to do this, I can click a couple buttons, boom, done. Whereas with Forex, you got to sign up with an account, you got to link your bank, you got to do this, and it's like, what the snap, dude? I'm just trying to arbitrage this. Why can't I just arbitrage it? Now let's go ahead and get into a couple of these smaller stable coins. The next one is Parallel. This one has about a $2.2 million market cap. And if we put this in euro terms, this one actually has held pretty well to its peg for the size of the market cap. And I believe this is due in part with the Mimo vaults. You can actually earn a yield on your parallel tokens, which are pegged to the euro. And you can earn about 14 to 15%. This one is a CDP token. If you go into the white paper, you guys can see here, it's 150% collateral ratio. For the parallel one, you can kind of look at it as a decentralized one, but it does have USDC as one of the collateral tokens that can be eligible to mint the PAR token. And of course, USDC is centralized. Now the next one is C Euro. This one has over a $33 million market cap. This is on the Celo chain. And as you can see here in euro terms, it looks like it did come off peg for a bit of time. It actually went down below 0.8 euros. So something to note for the Celo Euro. The Celo dollar takes a little bit different approach, but in order to mint $1 worth of Celo or €1, you need to put some assets in reserve. The next one I want to go over is Angle Protocol. This one is pretty saucy on how it works. This one you can earn some pretty good yields. You can also trade perpetuals with this one, and this has a similar mechanism to Curve, where you can get boosted yields with the Angle token. This is their governance token. So a couple of features of Angle Protocol is that it is multi-chain. They are on Phantom, Avalanche, Binance Smart Chain, Harmony, Fuse, Solana, Polygon. So they're on multiple chains. And they even have a convenient on and off ramp for getting funds onto the network. Here's a quick snapshot of the different farms that they have. As you can see here, some of them are paying as high as 56%. Of course, some of these are in the Angle token rewards, and this is a perpetual. You're kind of providing liquidity for futures on this one. The AG Euro, the stablecoin for Angle Protocol, is backed with wrapped Bitcoin, wrapped ETH, and wrapped staked ETH. So this is a decentralized stablecoin that uses the CDP model. How a collateral debt position works is if I put up $150, that means I can borrow $100 worth of the stablecoin. So it could be $150 worth of Bitcoin, and I can borrow $100 worth of euros for Angle's case. And this is the gauge model I was talking about that's similar to Curve. Basically, if you have some Angle tokens staked, You can say, hey, I want rewards to go to this pool, or hey, I want rewards to go to this pool. As you can see here, this is the different rates of returns on the pools, 26 to 66%. Whereas others that have less votes, this one only has 0.4 to 1%. And two other things I want to mention about Angle that's pretty cool is that when you deposit into any of these pools, you can actually say, hey, I want to deposit USDC, I can deposit ETH, Frax, and you can earn a pretty good yield on those. But keep in mind the risk you are taking on. If you look inside their white paper, the standard liquidity providers, they actually may face small slippage in any situation that it becomes not fully collateralized. Remember, you're basically the insurance for the insurance when you guys are providing liquidity. That's why you're getting paid these higher yields. Basically, you would deposit a stablecoin and it gives you their yield-bearing asset, and whenever you withdraw, it exchanges it out. To understand more of what a yield-bearing asset is on the back end, there is actually a farming strategy that is in place in order to get a yield on that token. So as you deposit, your token is exchanged for that strategy token, and when you withdraw, that strategy token is sold for the stablecoin and you get your stablecoin back. And then lastly, if you're wanting to take a long position on the euro, you can actually take a leverage long. I don't recommend leverage, but you can get up to 99x leverage. Lots of fun. 1% move, you get liquidated. Or actually 1.1, you get liquidated. And the last one I want to go over is euro. This is from e-money. This is a centralized stablecoin. This is on osmosis, so you can actually swap for this token on osmosis. But you can see here that it hasn't held its peg extremely well. But again, it's most likely due to the liquidity. There's only $1.2 million in liquidity. So basically what this means is if I was trying to buy $2 million worth of euros, or even $1.3 million worth of euros, or even $1 million worth of euros, there would be a lot of slippage. So at that point in time, it wouldn't be worth it. So the euros that have somewhat of a good liquidity balance, which is Tether's euro, it has about a $200 million market cap. You also have Yearn Finance's euro, which is about 125 to 150 million. You have Cello's euro, which is C euro. This is around 34 to 35 million. And then the last one is AG euro. This one is with Angle Protocol. It has about 45 million euros in circulation. So there's a couple of different options and opportunities you guys can use. Of course, this is not financial advice. I'm not a financial advisor, but please, please, please keep this in mind when you guys are looking at these different stablecoins. First, is it decentralized or is it centralized? You make your decision what you want to do when you figure that out. Second, how does it maintain its peg? Is it through an oracle? Is it through arbitrage? What is it? Third, how is the liquidity? Does it have deep liquidity? Is there a lot of slippage? If there's a ton of slippage, there's your answer if you should be using the token or not. Fourth, how has the past performance been? Has it been really good at maintaining peg, or does it seem to be extremely volatile and never go on peg? Fifth, look at it in the proper currency terms. Make sure you're looking at it in the euro term. And lastly, what backs it? Does it have collateral? Is it an algo stablecoin? Is it over collateralized? Is it fractionalized? You need to look into it and figure out what it is. You can usually find these in the docs and it will say, hey, we are a over collateralized stablecoin. Or, hey, our minimum loan to value is 150%. Or, hey, our minimum loan to value is 300%. Or it can be, hey, we're a centralized stablecoin. You give us €1, we give you €1 stablecoin. That's how we roll, and sometimes we make attestations to show you what's on our balance sheet, a la Tether. The things to note about this. If you're bullish on the euro, this would be a trade that you can make. If you're bearish on the euro, there's actually some protocols in DeFi that allow you to short this. Angle Protocol as well as Iron Bank from Yearn Finance allow you to borrow the euro token, and at that point you can swap it into a stablecoin or whatever you want and then buy it back later when it's a depreciated price. That is how you short in the market. So I hope you guys enjoyed that video, and I hope you guys are able to see the value of the blockchain and what it can bring to Forex. And let's go ahead and hit you guys with a wisdom one-liner. Proverbs chapter 13 verses 25. The righteous eat to their heart's content, but the stomach of the wicked goes hungry. Be righteous, be good, and you don't go hungry. We'll see you guys in the next one.